In this part, I'll be talking about weak highs and weak lows. Those are kinds of opposites of the strong rejections which I covered in the previous part. So let's imagine that this is some price action, price is going sideways, and then for example it creates a low, and then let's say it goes upwards again. And in this case I drawn the low as sort of weak low, alright? This is a weak low. There isn't a strong rejection. If there was a strong rejection, if there was a significant or strong rejection, then it would be like this. Alright, but this is a weak low. There isn't immediate rejection of lower prices. This is what makes it weak, that there isn't immediate rejection of lower prices. Weak high would look, for example, like this. Alright, this is a weak high. There isn't an aggressive rejection of higher prices. Aggressive rejection of higher prices would look like this. This is aggression, but this is weak high. And weak high or weak low is a sign of weak buyers or weak sellers. So if there is a weak high, then it is a sign of weak sellers who weren't able to aggressively reject higher prices, but they only done it very slowly, very shyly, alright? So this is how weak high and weak low gets formed. And now let me show you how to use it in our trading. So imagine that there's a downtrend, then there's a weak low, and then the price continues some way, it doesn't matter how. And let's now say that you would like to place a long trade, for example from this area. Let's say that this is a strong support, or you think it is a strong support. So what usually happens is when the price gets back close to the weak low or weak high, it tends to test it. It tends to test it and create a strong low or a strong high. So usually the price goes below the weak low. The price tends to test it and go below it. So this is why you shouldn't place your longs close to the weak low. And the same goes for weak high. So let's say that there is an uptrend followed by weak high. Alright, this is the weak high. And when the price makes it close to the weak high again, it tends to test it, to go above the weak high. Alright, because there isn't a sign of strong sellers. There isn't a sign of aggressivity. So the price tests it again, it tests above it. So this is why you shouldn't place your shorts close to the weak high. Alright, so it's not very clever to place shorts close to the weak high like this. So don't place your longs close to weak low and don't place shorts close to weak high, because the weak lows and weak highs tend to be tested. Another thing how you can use the weak lows and weak highs is that you don't close your trade if a weak high or weak low stands in your way. What that means is, imagine that you are in a long position and then there is a weak high created. This is the weak high, alright? So don't close your position, because the weak high will most likely get tested and the trend will continue at least few pips above the high of the weak high. Alright? So if you are trading in a trend, if you are in a long position, don't close your position when there is a weak high, because the price will most likely test it. The same thing goes if you are in a downtrend, you are in a short position, and then there is a weak low, then there is no really a reason to quit your position, because most likely the price will continue downwards to test the weak low. If on the other hand, if I said in the previous video there was a downtrend and aggressive rejection of lower prices, then this would be a good place to quit the trade, because this is a sign of aggressive buyers who could turn the trend, but this is not a sign of strong buyers. Alright, so this is how you can use the weak highs and weak lows. Let me show you one more example. In this case, you can see that there is a weak high, and you can see that the price rejected lower prices aggressively. This is an aggressive rejection of lower prices. This is a strong low, and the price continues and tests this weak high and shoots past it to create a strong high. Alright, so this is how price usually reacts to those weak highs. So if you, for example, had some trading level in here, if for example you wanted to go short from here, from this level, then it wouldn't really be smart, because price usually tests above weak highs like this one, as you can see in this case. A special case of weak high or weak low is the failed auction. What failed auction means is that two or more candles have their highs or lows at the same price level. You can see it in a picture. Those two candles have their lows exactly at the same price level. And this is the typical case of failed auction. The theory behind the failed auction is that the market is always in an auction. It's an auction that first goes upwards, then it goes downwards and upwards. It's a continuous auction, alright? An auction should always end like this. It's very similar to, for example, when you go to auction house and there is an auction for a painting, alright? So imagine you are in an auction and there are people who place their bids and the highest bidder wins the painting, alright? So let's say that you have 3 bidders who are willing to pay $1,000 for the painting. Then there are 2 bidders willing to pay $1,100 for the painting. And then there is the one who actually wins the painting and he's willing to pay for it $1,200. Alright, this is the winner. The failed auction would be if the auction ended at this place with 2 bidders for 1,100. And this is kind of weird because you always need to have one winner, not 2 winners. Alright, so this is why it is called failed auction, because the auction has failed. So what usually happens is that after some time, the failed auction is transformed to a successful auction. So this is a failed auction. Those 2 candles have lows at the same price level, but after some time, the price will return back to the level and it will test below this level to create a successful auction. The auction could continue, it could continue downwards, or it could test below it and then continue upwards. But if there is only the one winner, if the auction ends like this, then it will be a successful auction. Alright, so this is how the auction theory works. In trading, it basically means that if you see 2 candles ending at the same price level, then you can expect that when the price gets close to the level, the price will most likely test below the level to create a successful auction, to transform the failed auction into a successful auction. So how to use the failed auction in your trading? Let's say that this is some price action. Now let's say that there are 2 candles and both end at the same price level, then the price continues upwards, goes downwards, and let's say that you would like to trade from this price level. Let's say that you would like to go long from there. Let's say that there is some strong support, all right? But you see that there is the failed auction, and it's kind of risky because when the price gets that close to the failed auction, it will most likely test below this line to create a successful auction. So it's not very clever to go long from this area because the price will most likely shoot past the level to create a successful auction. So don't place your trades close to a failed auction. Let me show you one more example. Let's say that there is an uptrend, then there is a failed auction. Those two candles end at the same price level. Then the price goes downwards, returns back, and afterwards it's very likely that the price will test above this line, above the failed auction. So it's very likely that the price will shoot past it. So it wouldn't be really clever to try and place shorts somewhere from this area close to the failed auction, right? That wouldn't be really clever because the price tends to create a successful auction. Another way how you can use the failed auction in your trading is very similar to what I already showed you. Let's say that you are in a downtrend, you are in a short position, there is a downtrend, and then there is a failed auction at the bottom. Those three candles end at the same price level. So this is a failed auction. And let's say that right now you are tempted to close your position because maybe the price seems to be turning a bit. Maybe it's doing a little pullback. But because of the failed auction, there is a fair chance that the price will turn to test below the failed auction, at least 1 or 2 pips. So in case like that, I personally prefer to hold the trade until it tests below the failed auction. And only after that, I think about quitting the trade. The same goes for uptrend. So if there's an uptrend, then there is a failed auction at the top, little pullback, then don't quit your position there because of the pullback. It's very likely that the failed auction will get tested, that the price will go above it. So hold on to your trade and wait until test above this failed auction. The main reason the market wants to test the failed auctions is that the market is looking for liquidity. The big guys who control the market needs liquidity to enter their positions. And if there is a failed auction, then it's very likely that there will be somebody willing to trade above the failed auction in this area. Because there wasn't the strong rejection. If there was a strong rejection, then it would be a completely different case. Then it would be risky to push the price close to the rejection, because this would be a sign of strong sellers. But if the auction fails, then the big guys, the big financial institutions, are almost certain that there will still be somebody to trade above the failed auction. Alright, because the auction wasn't successful. There were more people willing to buy the painting for this price. So if the price is higher, then there probably still will be somebody willing to buy the painting for a higher price. And that's why the price returns back to this area to test if there is anybody willing to trade. And usually there is. Alright, so that's the logic behind it and how you can use it in your trading. I hope it makes sense. Let me now show you one more picture. In all those cases, you can see that there were failed auctions. All those are failed auctions. There's quite a lot of them on this picture. and all those failed auctions get tested sooner or later. So if I start from the left, then this failed auction got tested right there with this candle. This failed auction got tested with this candle. This failed auction got tested in here. This failed auction got tested also in here. Then this failed auction was tested in here and afterwards right there. And this failed auction got tested by this buying activity. And the last failed auction got tested in here. Alright, so as you can see, the price always tests above the failed auction or below the failed auction to create a successful auction. The low of the swing should never end, for example, like this. It should always end like this. Aggressive rejection, not a failed auction. Alright, so let's now have a look at some live charts and on some more examples.